Great. So welcome to today's Wednesday webinar. I'm going to be talking about creating a cash flow statement. I'm Shannon Dale. I'm with the University of Maryland Extension and happy to be here today as part of one of the Wednesday webinar speakers. And cash flow statements are one of the many financial statements farms use to make some decisions. And it can be one that's a little bit difficult to create, especially if you're requested to create one that projects numbers out or makes some plans out maybe 3 to 5 years. So we're going to talk a little bit about the basics of a cash flow statement, and then we're going to talk about how to create this financial statement, and then ways to use the cash flow statement on the farm. So here's just an example. We've got some case studies online. This is an example of what a cash flow statement might look like on an annual basis. And I would start off with saying that it really is impossible to create a cash flow statement without any type of other records or spreadsheets that you're going to be using. So each one of these lines, each one of these numbers has some kind of background to it. And I think that that's an important thing to recognize when people are putting a cash flow statement together. So an example here is, say, maybe it's my number 3, my berry sales. I need to have my sale records from the entire year. Perhaps it's the labor information on line 13 here. How much did I pay seasonal labor last year? What about my production costs? So I'm going to have all different kind of supplies for 8, 9, and 10. And then say a marketing budget for line 18. So I think that one of the things as you're creating that cash flow budget, you're going to be having lots of supporting information or lots of supporting records that will make these numbers accurate and will make them better. Okay, so that's one of the biggest things as you're getting started is kind of collecting those items and thinking about those big categories. And I think that's what sometimes can be overwhelming. So let's go back to what a cash flow statement really is. A cash flow statement measures the farm's liquidity. And this is the farm's ability to generate enough cash to meet financial obligations. So do you have enough incoming cash for the outgoing cash? Can you cover that? Farms need to manage liquidity or your cash to prevent any shortages to meet those debt requirements. And this statement lists all cash inflows and outflows for a period of time. So you'll remember on that other chart, there was a date or a time period. So you always assign that, and then you'll assign categories. And this is most often mentioned as the checkbook of the farm. So this is what you're writing checks for. So say there's equipment that's owned that, it might have tags, but there's not an equipment payment. That's the reason why all of these statements, they work together, but they show very, very different things. So again, the cash flow is your checkbook. It's your farm checkbook. So let's talk a little bit about your farm inflows. This could be product sales. Maybe you want to categorize it by your retail and wholesale sales. Perhaps it's by commodity or enterprise that you have. So if you've got crops or livestock sales, you can put those in there. Perhaps it's custom services or income from, say, fees, such as like a CSA, or maybe you have an ag tourism business that you charge certain things for. Perhaps it's farm receipts, like investments that you might have or conservation payments that you may receive. Moving down, it would be non-farm receipts, and that could be all farm income. Many of us, either families have some type of all farm income we may be generating, so that can be listed there. The sale of capital assets would be part of the income, and that's if you make some sales of any type of assets that you've got, like equipment, machinery, vehicles, land, any of those kind of things would fall under capital sales. And then other types of income are borrowed funds. So that could be loans or lines of credit that you have coming in and you utilize for the farm. Okay, let's talk about cash outflows. We see a lot of those. I feel like sometimes the outflows, you're writing those checks or making those expenses. So you've got production expenses, you've got seed, feed, fuel, supplies, and repairs. You've got capital expenditures like, again, equipment, machinery, land, and vehicles. Perhaps you're making payments on those, or you've got implements that you're purchasing and buying. The loan payments, so that's your mortgage, your credit payments, and any debts that you pay. And then oftentimes you'll have some type of withdrawal for personal expenses or a family draw on that. So if there's household expenses that you draw off the farm and use, so there's family living costs that are often included in your cash outflows. So once you've done a really good job with your record keeping and getting your spreadsheet together, you can then do some math and take your cash inflow minus your cash outflow, and you would get an ending cash balance for that time period. So with a little math, maybe some adjustments in loan terms, you would end with that cash balance. And we're going to talk a little bit about putting it together in a few, but I did want to make sure that we recognize the difference between actual and projected cash flow statements. They're also, projected is also called pro forma. So an actual cash flow statement is what happened. That's past tense. So I can look back last year, I can open up my check register and I can say, okay, this is what came in and this is what went out. I can review that past income and expenses. I think that is a great way to start, especially if this is your first time. Creating a cash flow statement is being reflective and saying, okay, this year, I'm going to look back and see where did the income and expense happen. You can use things like bank statements, tax records, your check register, receipts that you have, and be able to pull those out. So you get what you spent and it's more reflective. Then you can create a projected. So this is a great time of year. I always try to do my financial accounting talks in January because you're at that point where you're looking back and doing your record keeping, but then you're also looking forward and making plans for the next year. So I would sit down and write a 2021 actual cash flow statement, and then I would do a projection of 2022. So I can make some estimates. Maybe I can get some quotes. I can do some research about prices for future income and expenses that I might be expecting this year. And you can use things like crop budgets, maybe household budgets, and really your best estimate, your best guess. The ideal thing to do after you have both of these statements is to reconcile over the years, to compare them, and to sit down and say, okay, so I've got my projected and my actual. Was I pretty on target? Where do we change things? Maybe where we know fuel has gone up and seed costs have gone up. I know my feed costs for our animals have gone up. So you can say, well, I didn't really expect that. So you can make adjustments for that next year. So having both of those statements and putting them together and making those comparisons is a very, very good activity to do for the farm and the financial health of the farm. All right. So let's get into the mechanics of really putting this statement together. All right. It sounds good, actual, projected, but how do you put this together? And as I mentioned, you want to start with what you have, with what you know. That's the easiest place to get started. You've got your previous year's activities. And personally, I like to put together a monthly one. I think that's really helpful. I think that helps you see where there might be gaps. You've got perhaps a seasonality of crop sales. and where you need to plan for, what months you need to plan for. So you can see this graph here at the bottom, and I have it as a 2020. So that would be your summary. And then I can go back and say, okay, January, this is what went out. This is what came in, February, and go right through 2021 for all of the months. And then I can get a total for 2021. I think monthly breaks it down much easier, and you get a better picture of what your year looks like. I also like to break down the spreadsheet. So a lot of the templates that you're going to find, and the one that I'm going to send, is very generic. And it might even include things that you don't have. So perhaps you only do livestock and don't do crops, or you're more of a custom operation, or you do crops and not livestock. So feed or veterinary expenses isn't part of what you're planning for. So what I like to do is to modify it and break it down a little bit more. And you can see my little square here where, like under number 2, crop sales, I have maybe my sales from farmers markets and then my sale from CSA. Or you could even do it by commodity if you've got, hay sales, or you've got some type of specific crop sales that you want to track. Under number 4 is other income, other farm income. So maybe I do custom services, like I mow the Smith lot twice a year. I know when I'll get paid for that, or I do snow removal in the winter. And then for capital sales, perhaps I sold a trailer or with that. I would also encourage you to do that under expenses. So like insurance, you've got more than one type of insurance. So break that down into maybe your farm insurance, so vehicle insurance, health insurance. I like to break out those categories. And I do that as well when we teach QuickBooks, is really pulling out those ones where you might want to make some decisions like, wow, my car insurance has gone up over the last 3 years. Maybe I need to make some changes there, or make some calls, or get some new quotes. So I would really encourage you to modify these spreadsheets to work for you. It's very easily done in the Excel software. It's easily done if you're using accounting software. So now that you have sort of that monthly idea together, you can move to quarterly or annual. So you saw, like, I had the total on 2020 or the total on 2021. You can lump those together, and then you may want to go with a year to year or a quarterly type report. And an Excel hint that I have, and it's something that I have really have found a lot easier in Excel, is I create worksheets within one file. So I'll have one file that might say, Shannon's farm cash flow. And then I will have a lot of worksheets in that. So I can go back and forth to them. I've got them all right there. So this example here, you can see it all the way at the bottom. I'll have like cash flow monthly for 2021. And then maybe I'll do it on a quarterly and then an annual basis. And as you do this process over the years, you continue to build on the information, you get better at doing it, and you've got it all right there. So, maybe it's, this might be cash flow monthly 2021, and then I could do monthly projected 2022, or perhaps I want to do it on an annual basis. So I can look back what happened in 21 and then project for 22, 23, and say 24. Again, this information really does help with long-term decision-making, and maybe seeing where you could make some modifications in your cash flow. So then next is on this estimating and the pro forma. And I have served on a couple grant committees, loan committees, where they have required people to create a pro forma cash flow statement that's maybe 3 to 5 years in the future. And they can be somewhat difficult. I mean, who knows what's going to happen in 3 or 5 years? Who knows what farm regulations might change, or what's happened in the family? But having that projection and getting some numbers at least down, and then when you can start making modifications and say, well, I was on target here, but maybe I need to make changes here. So there may be instances where you need to have a longer range projected. So how do you do this? Look at your income streams over time. So where does the income come from to the farm? You want to consider your goals for the farm business and where it's headed. So, you may not be status quo. You want to see it grow. Do you want to see it grow by 2%, 5%? What does that look like realistically? So think about your farm goals and even maybe major purchases over time. You want to expand land or invest in some machinery, that kind of thing. Invest in some labor so you can hire. So think about your long-term goals. Think about your loan terms, when you'll be paying off certain loans, when those are due, when they're expected. Think about projections in market price and sales that you may have, expanding markets, that kind of thing. And then I kind of use this, I put this as the last one because this is sort of an all else fails, is sort of that percentage piece. Is, do you see a percentage decrease or increase in certain prices or costs? And while I don't particularly love that idea, I think that at least it gives you an example is, I want the farm to grow by 5%. What does 5% look like? So if you're having some cash flow problems, I'm outlining just some things here to tweak it. So that's when that bottom line is red or in the negative and not black. So some ways to improve your cash flow is profitability, more income coming in. What are ways that you can increase maybe some other revenue streams? If there's ways to identify problems beforehand, what can you do as far as the farm goes to maybe head off any issues or problems? Perhaps it's changing production plans and your inputs, so you can make modifications there. Managing your overall expenses, so perhaps that's contracts that you're in. Maybe you want to renegotiate your insurance, or maybe on an annual basis, you want to have a conversation with your insurance agent about what they've quoted you, or maybe you want to contract fuel because you feel like prices are going to go up. So think about managing those expenses. Improving marketing plans. So lots of programs and ways to get your product out there in maybe new or better ways. So could you improve your marketing plans? Perhaps it's leasing or renting or even hiring work done. So instead of maybe making one large capital purchase on a piece of equipment, maybe it is borrowing or leasing that equipment as opposed to the ownership costs. Ways to reduce living expenses. And I would definitely encourage everyone to have some type of household budget to know what it takes for the house to run and operate as it should. So knowing what those living expenses are. Off-farm income, again, that is a source of, especially for small and new and beginning farmers, oftentimes there's someone that is associated with the farm that's got an off-farm job or some type of off-farm support. Maybe it's refinancing. A lot of us did that. I'm one of them that did that in the last year or so, is just looking at other, either reducing terms, reducing your interest rate. Maybe it's expanding the term so it's a smaller payment, but looking at refinancing and how that fits with your farm operation. Perhaps it's liquidating assets. Look around the farm. What isn't being used? Is there ways to sell some pieces of equipment, maybe some things that aren't as useful on the farm anymore? And then maintaining those credit reserves is having that good credit where you can make purchases if needed, those lines of credit that are very important. So those are just some thoughts and options if you're looking at cash flow, and especially if you're starting to create those and you're getting negative numbers or not the cash flow number, cash reserve number that you'd like to see. Some overall tips for creating this cash flow is record keeping. Good records are going to help you keep on track with your actual cash flow, really, as well as making a projected cash flow easier to do. So as that happens every year, an actual and a projected, you can make better and better decisions. Accounting software is really helpful. If anyone is using something like QuickBooks or Quicken, or other types of software. That's very helpful. And we'll actually, if you've got everything labeled properly, we'll create a cash flow for you. Repetition. Completing the cash flow over time allows you more information on where cash is going and maybe make better decisions and estimates in the future. And then the other thing about a cash flow is it helps you learn your cash cycle. So doing a cash flow statement over time will allow you to see trends and maybe plan for the future, plan for big purchases, plan for retirement, plan for a trip, those kind of things. So know your cash cycle. And again, that monthly piece I think would be helpful. So with that, that is all I have today about creating a cash flow statement. I've got my contact information here, as well as our website that's got some spreadsheets. The other thing it has is some example and case studies. There's, I think, 3 posted right now, case studies that look at what these different financial statements might look like and what a business plan looks like. So that's available on the website, and I'll be sure to send it along with my slide set to everyone that registered today. So with that, I'd be happy to answer any questions. You're welcome to unmute or put any questions in the chat pod if you'd like.
Hi, Shannon, this is Heather talking. I'm getting into formalizing, going back and looking at actual cash flow over the first few years of my farm, and starting to make more refined business decisions.
Mm-hmm.
So one of the things that I'm starting this process is that when I try and put things in, I guess I have questions about like yearly prize buckets. So for instance, with livestock, there are often calendar years, right, where like there's purchase, there's feed costs, there's infrastructure costs, and then, or even butcher costs where the sales don't necessarily in that year. Mm-hmm. So I'm wondering about doing enterprise budgets for personal information and farm decisions versus just when I look at things year by year, it captures the full picture often through stages of growth.
So you're exactly right. So a cash flow statement is in and out, and that's exactly what will happen. Anyone that does like value added, that carries inventory, those kind of things, those are not represented on a cash flow statement. That statement is the income statement.
Okay.
So the cash flow is the checkbook, when you're getting income and when you're writing out expenses. An income statement adjusts for that type of inventory. So an example, and you're right, a cash flow statement does not show the true value of what you have. An income statement is a little more difficult. It takes into account depreciation, and it also takes into account, because there is a value of that equipment. Right? So I might be making payments on equipment, but there's a value to that equipment. So that's what the income statement shows. Same with inventories. So if you're carrying over inventory from year to year, the income statement will adjust for that to really show the true picture of to me, that's the true picture of the farm. The cash flow statement, it shows when you're going to be able to pay the vet, right?
Right.
But the income statement does show, I think they also call it the profit and loss statement, but that one is the one that is adjusts for those type of things. And the idea is that you kind of use all of those together, the balance sheet, the cash flow, and the income. They're very intertwined, but they show very different things. So that was a great question. And so an example is when you do your taxes and you meet with your accountant, you'll be providing them with the like the cash flow statement, right? Your ins and outs, your income and your expenses. But then they will adjust for all of those other things like depreciation, capital, all of those type of adjustments for the farm. So great question.
I'm going to leave. Thank you, Shannon, as always. You're wonderful.
Oh, wonderful. Thank you for joining today. I appreciate it.
Absolutely.
All right. And I'll go ahead and stop recording. If anyone